Hi Bankman, this is Vasant Ponkshe, a retired bank officer from Bank of Maharashtra. Now, IBC is also being considered as one of the best option, but we all know, we all observe for last more than couple of years that the actual recovery and the haircuts required to be taken by the banks are most disproportionate. In most of the banks we see the write-offs provisions are more than actual cash recovery. Is it not a bad situation? Now, once the moratorium period will be over, then the true picture will come up, and experts say that there may be another wave or another round of more and more NPAs, and banks will find it difficult to handle the situation. On the other hand, government is asking RBI constantly to consider one more restructuring options to be given to the banks and restructuring of borrower accounts and advances accounts to be considered by the bank, taking into confidence the customers. According to me, if that takes place, it will amount to restructuring of those loans and advances, because twice restructuring has already taken place in the past. But in the latest meeting of the board of directors, as we understand, nothing was discussed on this issue, and no decision has been taken as yet by Reserve Bank of India. Now, rating companies are also coming into picture. We all know that recently the rating company has downgraded the rating of Axis Bank, and there will be different problems also. On the other hand, rating companies are predicting that, as we know, many of the banks, many of the even nationalized banks, are likely to take a hit in their income to the extent of 40%, imagine, in the year 2021. Now, if that happens, then some banks, according to my assessment, may go even in operating loss. In that case, few banks may again draw prompt corrective action from Reserve Bank of India. Now, in such a situation, the need to provide more and more capital to banks will become inevitable on the part of the government, and at the same time, government may find it difficult to provide the capital to the bank as it was providing, as I already stated. And if the capital could not be provided, then it will be a breach of Basel III norms. That would be, of course, a bad position. This will take a bad name at international level, because on one hand, government may not be in a position to provide sufficient capital to the banks, and on the other hand, banks may not be able to generate their own capital from their own profits. Now, as I said, the rating agencies will not naturally come into the picture. Now, looking to the international scene, as I understand, as I have read through different columns, the IMF and World Bank has been insisting for three stages formula for banking in India, and it's not new story. What are World Bank and IMF are saying, what they insist on the government of India, the strategy should be threefold. First, recapitalize the bank. Second, restructure the bank, and if that is not enough, if that doesn't help, then straight away they are saying rewind the bank. Now, as we know, in Indian banking system, recapitalization has taken place. It is going on, going on, and going on. Restructuring of banks has also taken place. Now, the third option remaining is rewind, means nothing else but either privatize those banks or sell those banks to the private entities. I would like to draw your attention to old saying of one of the ex-RBI governor. Of course, in a different context, he said a couple of years back that according to him, let some banks be allowed to die. Is it not that serious? Is it not that very cruel to say like that? Now, in such a situation, government is thinking of stake sale, privatization of the public sector banks, or selling of the private sector banks. So we need to analyze and understand all this background which I tried to explain to you, on which grounds, in what situation, government may be having compulsions to think on these lines. Now let us understand the position about IDBI, because Government of India, as we all know, has already completed this experiment in IDBI Bank. So let us understand in brief the history of IDBI Bank. We all know that initially IDBI Bank was a subsidiary of Reserve Bank of India. Subsequently, Reserve Bank of India transferred IDBI to the Government of India. On June 29, 2018, Government of India advised LIC, that is Life Insurance Corporation of India, to purchase a major stake in IDBI and gave a technical go-ahead, imagine technical go-ahead, from the regulatory insurance authority, that is IRDAI, was also given to LIC, and LIC completed the formalities and increased its stake in IDBI beyond 51%. So it's all over. LIC completed acquisition of 55% controlling stake of IDBI on 21st January 2019, making LIC as a major stakeholder in IDBI Bank. In other way, it is privatized. It is sold out to LIC, as we can say. Naturally, Reserve Bank of India has clarified while its press release on 14th March 2019 that IDBI Bank, according to Reserve Bank of India, has been recategorized as private sector bank. Now, RBI says that IDBI is a private bank, but interestingly enough, the Government of India treats IDBI Bank as a public sector bank. For recruitments, for CVC references, for RTI, for employees related regulations, for government reforms and government actions, government treats as if it's a public sector bank. So enough confusion is already there in IDBI about the classification of the same. As I understand, on small issues related to employees, related to the customers, related to regulations, related to classification, related to the calculation and tabulation of the information, matters are required to be referred by IDBI management to either RBI and Government of India. And mind well, the replies from both the authorities may not be uniform and in tandem with each other. So that is the situation in IDBI, as they say. There are two cadres, one is IDBI cadre and the other is the different cadre, non-IDBI cadre you may say. And naturally perks and perquisites and pay scales may not be that equal as we can easily understand and assess. Now they say that government may try three types of ownership in different public sector banks or in banking sector. A, wholly government owned bank. B, majority government owned bank. And C, large majority stake held by the government in a bank. The concept of long-term private capital by the corporates is also being tossed on the other hand. It's a very dangerous concept according to me. If banks have to be privatized or to be sold, the options available are disinvestment, block deals, asking other public sector undertakings like LIC to purchase stake in banks, allowing FDI, so on and so forth. In short, government may plan to reduce its stake to 75%, then 52%, then 49%, then 30%, then even 26% as I envisage. The government is planning to allow, as we understand, FDI in banks also from present rate of 20% to 30%, then 40%, and who knows, may finally allow up to 75%. Now, the latest law amended in 2013 about the voting rights in banks is outdated according to the corporates and experts. Now, as per this latest amendment, an increase in voting rights of an entity in a private bank has been raised from 10% to 26%. Similarly, voting rights for any entity in public sector banks has been raised from 1% to 10%. Now, as a result of this amendment, the powers have been given RBI to supersede the board of any bank up to 1 year if Reserve Bank feels that the bank is not working properly in the interest of deposits. It also gives powers to Reserve Bank of India to ask for the information from banks' different associates. This amendment has taken bank mergers and acquisitions out of the ambit of CCI. Mind well. In short, any entity having large capital in its hand shall have only 26% rights maximum in any private sector bank, and to the extent of 10% only voting rights in any public sector bank. That is a catch. If the banks have to be privatized, then government may have to increase, according to my assessment, voting rights beyond 26% in private sector banks and beyond 10% in public sector banks. Otherwise, for any company or stakeholder to have huge capital investment in private sector banks and public sector banks and have only 10% voting rights and 26% voting rights, then how that entity would like to invest to that extent in any private banks or public sector bank? In that case, who will purchase the stakes in public sector banks for only 10% voting rights? Now, there is a thinking that business houses will be given licenses to open private banks with the condition that they will not lend to their own subsidiaries and sister concerns. But surprisingly, they may lend to each other's subsidiaries and perfect with a perfect understanding, and we all know no one can stop that. In short, for preparing for sale or privatization of public sector banks, the government will have to do lot of paperwork and groundwork according to me. Now, as we all know, Nationalization Act will have to be amended, and for that, Parliament will have to be moved, both houses, Lok Sabha and Rajya Sabha. Now, PSBs, we all know, are governed and regulated by RBI under the Banking Companies Acquisition and Transfer of Undertaking Acts of 1970, and the same also will have to be amended through Parliament. We all have seen as to what has happened to Air India. The government has put Air India on the block for sale in the last couple of years, but there are no takers. Jet Airways could not get strategical investors, and that is why it had to wind up its all activities. So many conditions in case of Air India were diluted. The liabilities of Air India are being taken by government one by one to make the offer more and more attractive for purchase of Air India, but there are no takers. That is a worse situation actually. But government wants to sell Air India, but there are no takers. So it's not that government of India wants to sell a public sector bank, wants to reduce its stake, and government wants and immediately it can do that and somebody comes forward and takes it. That is not going to happen. It will take some time and lot many issues will come up. Now government, when it may decide a sale stake or completely privatize a bank, it will have to ensure that that particular bank is truly sellable product. Its balance sheet is strong, its expenses are minimal, and its income is attractive, and actually it's a profit making entity. Otherwise, who will come to take that bank? On the other hand, government has recently brought cooperative banks under the supervision of RBI. That will create lots of issues, and true picture of the strength and weaknesses of balance sheets of cooperative banks will come to the floor in next few months, or say within a year or so. In my own assessment, RBI will have to issue directives under Section 35A of the Banking Regulation Act 1949 and amended 1970 in respect of more and more cooperative banks, and RBI will have to bring curbs on those cooperative banks in terms of grant or renew any loans and advances, make new investment, incur any new liability or borrowed accounts and funds, accept new deposits, so on and so forth, and maybe restrictions on disbursement on loans, even sanction earlier. On the other hand, NBFCs, we all know, are struggling and the problems are being postponed with temporary measures. Many small banks, finance bank, may also do not have a different story to be told, and nobody knows what will actually be their position in next 1 or 2 years. Now, let us see what kind of major disruptions are likely to take place in banking industry in India, actually at international level also, but let us consider about India. Now, major disruptions are in the offing by way of technology like artificial intelligence, blockchains, chatbots, open banking, cryptocurrency, machine learning, digital voice assistants, smart speakers software, so on and so forth. Naturally, the job losses are inevitable. At least there won't be attractive recruitment in days to come. Now, Google is also coming up with a platform with the help of of their own local inputs, and it is likely to offer a platform for SMEs and MSMEs for sanction of loans as they may be requiring, and that would be a major disruption. On the other hand, Jio and WhatsApp, they have tied up and they have roped in Visa with the help of NPCI to have a biggest payment network, or we may say payment gateway, and that may be a great disruption. We all know that today more than 50 crore customers are there with WhatsApp. Now imagine Geo, WhatsApp, NPCI, and Visa payment gateway. Naturally, the workload of banks will be reduced. So also the income of banks will likely get reduced. So government will have to do lots of work before attempting to privatize or sell any public sector bank. Many steps banks also will have to take in this regard as may be directed by Government of India.